Welcome to NGEN Markets Training session. Meanwhile, while others are joining in, so we will start with the session. So in this today's session, we are going to talk about custom benchmarking and sectoral review. So as you can see, we have just updated here is custom benchmarking, how it's going to be useful when you review the portfolio of your clients. And also we will also look into sectoral review. So whenever you construct a portfolio, let's say with the thematic mutual funds or any such of equity mutual funds which is having higher sectoral exposure in some particular sector such as pharmaceuticals or any other sector, so we are going to take the review of the same, and then we will have Q&A session with everyone. So you can ask us the question and we will address them accordingly. So let me share my screen up. So I hope my screen is visible to everyone and I'm audible. And so I'm just sharing the terminal here. So the terminal is here, and let's start with the session. So accordingly, I hope I'm so the screen is visible. Yeah, so I hope so. Okay, so here, as you can see, we have overview. And I'm just talking about overview because you can compare multiple indices here. So before going to any custom index, we have given a facility where you can actually compare indices in NSE and BSE all together in one place. So why is it important? So within a decision making where you want to choose some sectors, right, in BSE, so you can definitely choose them just by clicking on them. So let's say we go for NSE and we choose some sectors such as Nifty Pharma and Nifty IT and possibly Nifty Banking. So accordingly, you can see here that these are the indices which are updated here, and you can rebase them. So what does that mean is that it will start from 100 and it will show you that what is the performance based on if all the indices are starting from 100. So you can see that the highest performance which is backtested is by Nifty IT. So that is how you can take a call. Let's say we just zoom it in here. So you can definitely see the performance of, let me just share it from here. You can definitely see the performance of Nifty IT has been drastic in this last couple of 1 to 2 years post pandemic. So that is how you can take a view on multiple sectors here, and also within BSE and NSE altogether here. And similarly, we have given one more thing, which is best 10 BSE and NSE sectors within 12 months, 6 months, 3 months, and 1 month. So considering a long-term view of a 12-month view, you can definitely see what are the best performing sectors and what are the worst ones given here, based on whatever parameter you have chosen. So let's say you have chosen NSE. So based on that, top 10 NSE and BSE sectors will top 10 NSE and worst NSE sectors will be shown here accordingly. So this is how this works out. You can even screenshot this up, and if you want to share this statistical data with others, so that is how the overview section works out. And you can also compare some sectoral indices with our premier indices such as BSE, Sensex, and Nifty 50 to see what the actual BSE, Sensex, and Nifty are performing against those sectoral. So the main purpose of having some sectoral or thematic funds in the place is to actually outperform some major indices. That is the only main purpose we actually look into. So that is why this is very, very useful if you want to look into a snapshot overview of market levels in one place. So that is how this works out. Let's go ahead directly to the portfolios, where we will be constructing some portfolio. I will show you a model portfolio first of a client, and then we will look into some construction of some portfolio with a thematic approach, so that we can actually be able to build in some portfolios and also custom benchmark it accordingly. So here we have a prospective client. Okay, to add in a prospective client, there is very easy way we have given here is to just click on this plus button, and you can add in via upload option. So CDSL, NSDL, CAS PDF, CAM summary report, and also ISIN from Excel. So if you have an ISIN number, all you have to do is, validate the input. We have given 3 options and then run it. So once you run it with a name, the portfolio will run. So that's how you can do it. I'm just canceling as of now to show you that this is our prospective client we have as per given, and we would certainly make some changes, but first we would review this portfolio based on what we have right now. So this is what the client is holding, and we can look into the asset allocation given here, and we can see that in the overview we have most majority of our asset allocation is on equity. You can click on those equities and you can see where from where this particular equity exposures are coming from. As a matter of fact, you can see Sun Pharmaceuticals. If I click on this I button, you can see the direct holding, which is coming directly from the direct equity, which I have an exposure of, and another one is coming from Nippon India Pharma. So this you can view for any other particular equity exposures given here. If I add in, ICICI Bank, let's say, right? So to add in, I just have to type in here, and that's it. And I rescale this to 100. I run this portfolio again. So I'm not saving this portfolio, but I'm just running it. So hypothetically, I'm just checking, what would have been my performance and what is my asset allocation now. So you can see now I am having a very huge exposure in ICICI Bank. Now I can just click on this I button and see that from where it is coming from. So 9% is altogether coming from direct holding. Others are very small exposures, which are coming from mutual funds. Similarly, you can also click on this detailed view to see if there are other detailed view given here. But secondly, we will look more towards how our market cap exposures are. Basically, we would like to know how much we are allocated towards large cap, mid cap, and small cap. Now, why this is important? Because once we are constructing a custom benchmark, we would definitely want to know what is our large cap and mid cap and small cap. So let's say if I have taken a call that Nifty 50 will be one of the major constituents in my custom benchmark, I would definitely choose something closer to 40-45% to keep it in a safer region to actually benchmark it properly. So either you can do the benchmarking based on the equity market cap exposure, or you can also make it an hybrid approach by checking your equity sectors. So all you have to do is just click on this and you can see what is your top equity sectors as of now in the portfolio. So you can see you have pharmaceuticals, which is highly into your portfolio, banking and healthcare and finance. So, most of the healthcare and pharmaceuticals you can actually relate it up to, and you can click on them and see the stocks inside them. And definitely you can also see for banking and healthcare and finance, every single sector, if you click into, you can see those stocks which are consisting those sectors. And also you can also download this entire sector exposure. If I click on show all and if I click on download sector exposures, everything is downloaded in one place. Now the thing here is, there is another way to actually review your portfolio based on the types of funds, right? So types of funds are given here. Yeah, and you can see definitely that there are fund categories. Accordingly, you can see that there is a sectoral pharma fund, which is a thematic fund you have added. There's a mid cap fund you have added. There's a diversified, so it might be due to let's check which one. So it is uh, Nippon India Power and Infra. So diversified, sectoral diversified is given here. And then we have large cap and flexi cap. So accordingly, you can actually take a call that what are the constituents which are going to be in your custom benchmarking. So now let's activate custom benchmarking all together into the system, right? uh, Here what you can do is you can click on custom benchmark and you can click here to add and manage custom indices. Now I have already added multiple custom index here, but before just looking into what I have added, we will try to construct one for ourselves. So I'm just gonna give you a brief overview that what you can do. As we all know, most of 40% of our in entire portfolio is actually large cap. So we can take a call. Let's take it Nifty 50 all together and add it up into the index. So let's say we keep it 35. So this is all my approximation. You can use your own approximation based on what you consider to be, good constituent for making a custom benchmark. And then you can add in those indices. So I'm adding another one as of now. Let's consider pharma, because pharma was huge in our system. So we just add the index, we keep it as 15 or 20%, right? We had some mid caps. So essentially, you remember, if you know that we had some mid caps as well. So we can add some mid cap, let's say Nifty mid cap 100, and we make it 20% here. And all you can do is you can also add in other indices as well. So you can generalize this index, or you can add in some other indices altogether. So I'm just adding it for, as of moment, financial services. So to give you an overview, that 25% is financial services. So here I'm just adding the index, and I just keep it 25%. You can take your call on this, because this is always not fixed. You have to make some permutations and combinations before reviewing how a custom benchmark will work out. And you can make multiple custom benchmark and see what is suitable for the portfolio altogether. So here you can just write in, let's say, hybrid index, or possibly 1.2, and save it. So once you save it, it will take a couple of seconds, and once that is saved, it will be updated in the system here in the left side. So this is the list in the left side which is given here. And what you can do here is you can actually download the prices of that custom index as well. So to do that, all you have to do is click on this Excel button, and just how you can download the price series of any mutual funds or an index in NGEN Markets system, you can also download the custom index price series here as well. So this will be there in Excel. You can also do it that up, and you can also edit this custom index. Let's say you have done this custom index and you want to edit it again. So before editing, just let's go back and let's see if the performance is actually showing appropriate relativity between the index and the new portfolio which we have added as well. So similarly, you can just click on this hybrid index 1.2, right? So once I've added that, you can just keep up any particular start date. Let's say we keep it as 5 years ago. This is all we want to do, that how we are relatively performing against this hybrid index from 5 years. And accordingly, we can view the performance, outperformance or underperformance altogether, because that will be more of an appropriate benchmarking altogether. Now here in this case, right, you can see that your annual return over benchmark is 2.52%. Now, always whenever you talk about benchmarking, these performance stats are lesser relevant than these performance stats, because this is the relative portion which you have to look into. This is the portion where you have to actually take a call that what type of a benchmark you have chosen. And one thing for sure is, the lesser the tracking error is, the more appropriate it gets that you are mirroring the benchmark altogether. Your performance is actually mirroring the benchmark. And in the sense, if it is a lesser tracking error, it is a possibility that you might not even have a outperformance, or you might underperform altogether, right? So always ensure couple of things, that whatever you are trying to achieve is, the main goal is to show the client that the portfolio you have chosen for the client is actually an appropriate portfolio. Sometimes what we do is we directly compare this entire portfolio as it is all equity, and we have some concentration in large cap and mid cap, or possibly we take in one such index such as Nifty 50 or something like that, which will particularly solve, let's say, large and mid cap. And that's how we would do, and that's how we show the performance. And accordingly, you can see that annual return is 1.15. But that is not the case. You have some pharma exposure, you have some some of the thematic funds altogether in place. So to appropriately benchmark it up is very important. So if I use my hybrid benchmark, as you can see, this is what I've chosen, right? Now you can see this is the annual return over benchmark, which is 1.15. If I choose in my custom benchmark here, any which one I have created, right? This one, hybrid 1.2. This is actually having a better annual return over benchmark altogether. So this is how you can actually convey to any such clients that, whatever outperformance, you're achieving is actually better relatively, because benchmark is all relative. If I choose a underperforming benchmark, let's say we choose CCIL bond against an equity, that will not make any sense, right? If I choose in, let's say, CCIL bond index, now you will say that is a very wrong index, and I'm having an annual return over 7.13. But this is all wrong, because we all know that we cannot compare this with an CCL index. This is an equity portfolio. So that's why a custom benchmarking can solve a lot of issues when it arises against the relative performance, because relative performance will always depend upon what are the constituents inside those benchmarks. So here you can see this, so to actually gauge this entire, performance against a benchmark, you have to look into this particular parameter. And as you can see, whatever outperformance we had, the major outperformance is from 2021, and that you can view here. This is a cumulative outperformance which I'm showing here. Most of the time, from the last 5 years which we are checking into, the last from 2021, we are outperforming this hybrid index. But what about if we check into up captures and down captures, right? So against the benchmark, how we are capturing? So our return set is not better than the benchmark. Accordingly, these are the monthly breakdowns. You can see every single month what is the return of our portfolio. As you can see, these are the return, right? And what is a return of a benchmark? So here you can see the return of our asset, which is our portfolio, and the benchmark, and we are actually underperforming. So that's why our up capture is less than 100. If an up capture is higher than 100, then in an up market, we will have better return set than a benchmark. Similarly, so how our, most of our down capture, you can see here, what we are down capturing is lesser. We are making lesser losses than a benchmark. And that's the, major reason that we are having a good annual return over benchmark. So whenever a benchmark falls, we fall lesser. And that's how we make better annual return over benchmark altogether from this particular start date. And definitely, if you change the start date, if you want to change, all you have to do is you keep it like 2016, click on this date particularly, and then you will have a different set of relative numbers altogether. So now if you would have started your investments from 2016, from this particular date, you will have a better up capture altogether. And that's what it shows you, because you are actually capturing better returns than the benchmark here, and you're also having a better down capture. So your losses are lesser than the benchmark. And this is the monthly breakdown. So by the way, this is very useful to see how the monthly breakdown has been, because we are looking into the behavior of our asset, which is our portfolio, against a benchmark. So, if you can look into, let's say in March 2020, you might know this is the COVID period. We both together had a very similar fall. But after that, in May, we had a lesser fall. Now why there is why there isn't April? Because in April, as you can see, this is all down capture, right? 2020. So you can see that April is available here. So April is an up capture actually. So up month was the April. So if we see the April 2020 given here, as you can see, this is the April 2020. So we actually had a good up month, but the benchmark has actually outperformed us. And this is very insightful data if you're looking for just up capture and down capture, because just looking into this ratio will not make any sense if you do not know what is going underlying it. What is a monthly breakdown, how we are behaving against a benchmark altogether, so that we might be able to guess, or we might be able to take a decision as to what should be the optimal range of of our asset allocation against a particular hybrid benchmark, which we can actually suggest to our new client. This is one thing which you can do. there are many ways to construct a thematic portfolio. I'm just gonna, first thing what I'm gonna do is I'm just gonna go back into my fund section to show you that how we can actually look into some funds which are having a very high exposure in one particular sector. And how you can achieve that is we have given a fund section here in the left side. So to look into, sectoral holdings, all you have to do is check holding analysis. Now, holding analysis, sector changes is one particular, tab which you have to look into if you're looking for some thematic funds. Now, why am I talking about this? There are several ways to use holding analysis, and I'm just showing you the way which is, appropriate, which is relevant for today's webinar altogether. One way is, let's say I want to know what are the top banking funds which are having a highest sector holding, highest banking holdings. All I have to do is check from as of May 31st May 2022. I click on this 19.10%. This is the average sector holding altogether given here. You click on this and you can click on the percentage allocation. Now, accordingly, you can definitely see how much crores it has been invested into the banking, and you can see these are the funds which are having a very high allocation towards banking. And you can see that there's all thematic. These are all thematic funds. Let's say you want to know non-thematic funds which are holding highly into banking. How you can do that? You can just click on this, right? This is an equity categories. You can click, and let's say you want to know which flexi cap is holding highly into banking. Now you might obviously guess that is going to be one of the Kotak Flexi. And if I click on it, you can see Kotak Flexi will have its highest allocation and amount invested in crores. It's Kotak Flexi altogether. So you will definitely know that if you are suggesting a flexi cap, there is a possibility that these flexi cap will have a very high allocation towards one particular sector, because that's how fund managers anyway take a look into when they're looking for some sectoral allocation. Similarly, you can also look for pharmaceuticals. Now I have always take a look if you have taken some category altogether, because if I clear it, it will show for the entire universe of mutual funds in equities. But right now I'm just looking for flexi cap. So if I want to look what are the pharmaceuticals exposure for flexi cap funds, I can see this is 5 point average holding, but there might be some funds which are having higher allocation altogether for pharmaceuticals. I can click on the percentage and I can see that UTI, Aditya Birla, and Quant. So I mean the amount is less, but you can see they are allocating highly towards flexi cap. Now there are some notion here that Quant is one of the highly volatile mutual funds in the space, and some people might be suggesting Quant funds. So we would like to know what are the allocations altogether. What is the highest allocation these funds, flexi cap funds, are having for that particular sector? And there are only 16 funds, as you can see. So I'm just constricting the space of SEBI category. If I clear this up, and if I look for pharma, what is the answer would be? That will be a Nippon Pharma or Aditya Pharma, UTI Healthcare Fund. These are the funds which are having a very high exposure towards pharmaceuticals. And even you can see that Quant Focused Fund is, Quant Focused and Kotak Manufacture in India Fund is actually, it's surprising, because you can definitely see there are some other funds which are having a very high exposure in pharma, such as L&T Midcap, right? And if you take a look into amount in crores, you will see UTI Flexi, Access Long-Term Equity is having a huge investments in this particular sectors. So they are taking positions there. So you can actually look into these and actually determine what are the possible funds, what you have, whatever you have chosen is actually appropriate when you're creating a portfolio. And to create a portfolio, if I just choose in this particular portfolio altogether, and if I add in some thematics, right? So let me just run this portfolio again, and I will edit this portfolio to show you that if I add in some thematics and if I make a custom benchmark for the same, how will the performance will be. So it's going to be one case study here, right? And accordingly, you can just click on this, right? And you can just remove some of them. So I'm removing for a hypothetical purpose. Let's say I'm removing DSP midcap, Aditya Birla SL midcap, and maybe let's say we remove Nippon India Growth. So we are removing all the mid caps. Now all we are trying to achieve here is to add in some different funds which are having different let's say we add in another banking and financial services. So maybe we can increase this allocation, right? So we make it 20.60. So now we have one pharma, one banking, another Tata Digital India, and you can choose in more thematics as well and make a case study altogether. I'm just rescaling to this to 100. I remove this Franklin India blue chip and all, right? uh, let me add some other funds. Let's say we add in sector. Let me just give me a moment. Yeah, so let me add in a blue chip fund. And as we remember, we also had Kotak, flexi cap, which was having a high exposure in banking. So let's try to add Kotak as well. So to see if the correlation is working out. So, we are just trying to see if that will work out or not, right? So now that's how, I've added. I just rescale this to 100 and I run this portfolio. So I just have to, make it 1 and run this. So once I run this, right, you can actually look into some performance. So here accordingly we are actually underperforming Nifty TRI, and as you can all see, and you can actually make a case here that you can make a hybrid benchmark, and if see if the allocations what I have made here is making sense or not. Because accordingly we can definitely say the asset allocations we have is in equity, but what about the sectors, right? So if you see the sectors here, banking, IT, software, I'm highly towards this sector, right? So I would rather have some, thematic equity sector, thematic benchmarks, so that I can make a custom benchmark out of it and actually compare them all together. And also having thematics is one advantage, because if you see the correlation, right, your correlation is going to be possibly low against other funds. So if you see a correlation of Nippon Pharma versus Kotak Flexi, it's low. A low correlation. We had a meeting before, a webinar before this. A low correlation is a very subjective question, but a low correlation equities is considered as 0.6575 in the range, and a high correlation is actually 0.95. Now you can see Kotak Flexi and Franklin India Flexi is having a very high correlation. And against that, if I actually check the correlation of Kotak and HDFC banking and financial service, it's definitely a low correlation. So accordingly we can actually check out the correlation as well, that if the behavior, even if the constituents are into banking, Kotak might have some different sets of banking stocks altogether to have a better lower correlation, or maybe some different sets of asset allocation to actually have a different set of performance against HDFC banking. And that is a good thing, because if we are taking these two funds into the account, and if we are trying to asset allocate all together, we will have a performance which will be altogether different. As you can see, my annual return difference is negative. That is true. But what if I make an hybrid benchmark and see if that hybrid benchmark is working out or not? So I'm just adding a random hybrid benchmark as of now. And let's say you have done that and you can see there is an outperformance now. So how that happened? We are just relatively, we have performed similarly, right? Uh, Before changing the benchmark, our performance was as identical. Only thing that changed was the relative portion. And that's how you will be, this custom benchmarking is useful to convey that what asset allocation you have chosen for your client as are actually appropriate asset allocation based on the sectors you have chosen, right? So that is all for the session. You may start with your questions altogether. So we can start with the Q&A session. You can write it on the chat box or you can verbally ask us. We also have Arunav sir on board, so he will be there. Any questions? Yeah, there is a chat in the chat box. I'm just checking in. Um, yeah. So is it not better to use the category of funds for index than sector composition? Definitely. So that's what I have shown you, that that is a call you should take if your asset allocation is highly concentrated, right? In particular, like such as this, then you can go for an equity sector. But let's say you're not sure, because sometimes what happens is, we know that most of the time banking and IT software and finance are highly allocated. So you can directly check the types of the fund categories, like let's say pharma and banking and flexi cap and large cap. As you know, flexi and large cap are having similar composition altogether. So you can actually make a very good set of a benchmark by just by looking on the categories of the funds. But there is a possibility that I have noticed this, that some of the mid cap funds are not having too much mid cap exposure. So that is the only reason. That's why we recommend you to look into equity sectors as well, to see if you are highly concentrated towards one sector or not.
Hi, this is Aruna. One more thing. You can use the category of funds as an index, so like in category average or something. But the one issue with that is that if you're looking at the historical price or the historical returns of a category average, that becomes a bit tricky, because if you look at the category averages right now, even on our fund section, they will show you the average of, let's say, the large cap category. But in terms of how many funds we have today, right? But if you look at 3 years ago or 5 years ago, the number of large cap funds in existence would be so because out. So when you considering a category average, do you consider funds that have more AUM more important than the ones that have less? So there are several considerations when you try to use category averages. So we can look at category averages, but to look at a history of a category average, that becomes a bit trickier, and there are many different ways with more when you're thinking about category average.
Are there any other questions? Yes, so there was a question, right? ETF funds, how's that? So, so can you please elaborate on that? Do you mean the portfolio with multiple ETF funds, and then you want to make a custom benchmark on them? Yeah. So basically for ETFs, you can have ETF funds as well, ETFs as well in here, and make a custom benchmark. Only thing here is that uh, you know if it is appropriate, how much the tracking error, you can look into the tracking error and see what oh yeah, so in overall configuration, right? So let's say you have like 4 ETFs and some multiple mutual funds. So you can if those particular ETFs are correlating with the mutual funds, then it will make no sense to have two different indices altogether, for separately for ETF and separately for mutual fund. So what you can do is you can just add in similarly what you're doing right now based on the allocation, based on the type of the particular fund, and you can actually see what tracking error you're having. If the tracking error is truly high, so the outperformance, so basically the behavior of our asset portfolio against the benchmark will be different. So that is how you can look into.
Also, an ETF, for ETFs, there are several other advantages. Get direct access to many different kind of asset classes. There's foreign equities, there's commodities, things that you or Nasdaq or get exposure to gold so quickly and so easily. So ETFs obviously have their advantages. If you want to, let's say, dedicate 20-30% of your portfolios to some broad asset classes, you just simply buy an ETF fund that represents that particular thing. So I mean, ETFs are a pretty good way to get exposure to various different things, and we have a pretty good coverage now in India for ETF funds. So I think they should definitely.
Are there any other questions?
Yeah, I have a question. It's not directly related to what we are discussing now. This is Pramod here. So can I go ahead?
Yes, sir.
Yeah. See, this is with respect to the reports we generate. Okay. So when we take up any of the fund report and you go with a 3-page fund report, it by default takes a category average for comparison. Okay. So let us say that you take Kotak small cap fund. Okay. Maybe, Kotak small cap fund, and you generate the 3-page report. Then default it goes and compares the category average in the 3rd page. Okay. So if you go down to the 3rd page, it will at the top of it, it will give the category average. Okay. So
Yes.
in the category average, if you see, the first year, the chosen fund or the recommended fund which we are looking at is showing as underperforming. When you dig slightly deeper, it is because, if you look at the small cap funds and check the performance, the top performing fund is actually 1 or 2 years old. And it has been doing excellent only in the last 1 or 2 years. The life of the fund itself is 1 or 2. But because the category average factors that also, I think somewhere it is not showing the real picture. Ideally, don't you think it should have when I say a time frame like we have in comparison, right? We can choose a start date, and everything which is coming after that start date will not be considered. So minimum time of overlap. So I think the category average should also have something like that, so that this can be overcome. So I think this is something which I faced in the recent situation.
So this can be done. However, the only issue with doing this is that if we add this condition in creating the average, then we will obviously also have to disclose the condition clearly over there. Because right now we are saying this is the average 1-year return across all small cap funds, right?
Correct. But my point, Arnab, is it is going to be not very much representing the actual performance of the fund with the benchmark, right? I mean, with the benchmark or category here. Because, you may choose a small cap looking at the long-term return, but then when the client says that, he may feel that it is not performing in the recent past, why are we looking at this fund?
right? So we will have to mention that in the report. Otherwise, this will not match.
Correct.
So we can probably possibly put some kind of filter in the peer analysis section
Correct.
tab within there. So by default, this will load, and if you put that condition, that will load. But that little, maybe a little disclaimer line will come somewhere showing that this average is created using funds that are have been at least running for 3 years.
Correct. Correct.
Yeah.
And one more, I think, when you generate a portfolio report, not a fund report, when you generate a portfolio report, and if the portfolio is full of equity, like let us say 100% equity funds, the report still throws up the debt funds related data, like, YTM and other aspects, the quality effort. So basically half of the page shows up as, blank or not, applicable. So is it possible to do away without that? Because, if it is not required as part of the portfolio, why should that be coming in as a part of the, I mean, there is no information there. So on the 3 pages, half the page is actually empty. And sometimes it will only show up that less than 1% cash and other, money available as a debt. So I was just thinking, is it possible that the report can be based on that equity and debt, what we are looking at, rather than a default category?
Sure. So I think Arunab sir's voice is not audible. Yeah, so we will take a look into this, sir. I understood that once you create the report, there are some, blank columns due to, no availability of the debt in the portfolios. So we will look into this and we will definitely address this and let you know on this.
Okay, great. Thank you.
Yeah.
I'm sorry, I got cut off there. For your questions about the PDF, where for equity focused funds, the debt portions are still showing. This was raised to us before, so we can definitely try and look at that. Where if there are no debt funds directly held there, then we can remove those portions and maybe replace them with something more equity focused. So that is one of the things in our list. So it has been pointed out.
Thanks, Arnab.
Thank you.
Are there any other questions? Okay, seems like we do not have any other questions, so we can wrap this session today. And if you have any questions after the session, do let us know. Connect us on support@engineresearch.com. I'm just typing the mail here directly, and we are also adding this webinar videos on YouTube, so you can check this out if you have missed out something. And also, in the next session, if you have any queries, let us know. We will address them all together for the next session. So next session will happen on the same tentative time, Friday, 4 o'clock, and we will have another topic altogether for that particular session. So thank you so much for visiting this particular session, and have a nice weekend.